All right. So as you guys go through this article, you're going to continue to see some more details about, this cost of living crisis deepening and then the energy bills jumping up 54%. The reason why I think this is important going into the press conference is because this is going to be this is obviously affecting the consumers directly, right? It's a dramatic blow to households already suffering a cost of living squeeze that's only set to get worse. So today, if we increase the interest rates by another 0.25%, right? If we come to that 0.50 basis point or higher, then that is obviously going to be adding on pressures onto the households, right? Onto consumers who are no longer able to afford the new loans and all that stuff at a much higher interest rate, right? And so that is going to go ahead and play into the overall economic health. And is that something that the central bank thinks the households will be able to and the consumers will be able to handle if they were to consider another interest rate hike? Or do we end up seeing an interest rate hike today based off of the data that we have been seeing for the past month or so? Because the last interest rate hike that we had was in December, so it's really only a month worth of data. So do we see that interest rate hike right now? And the next one, in the next meeting, are we going to have to drop it back down so then it's more affordable for the consumers? Right. So I think this is going to be very important going into the press conference and also the future interest rates that we are set to see for this year.
Absolutely. Yeah, no, that's a good point.
Yep. And then with that being said, go ahead and you can share your screen.
Okay. Yeah, no more Bloomberg. All right, let's take a look at pre-markets. We'll take a look at also our calendars and Forex Live, stuff like that. But as you guys see, the US 30 right now, all these equities have been recovering, right? We had that end of the month little drop. And if you notice at the end of most months, you'll get a nice little drop, or, the beginnings of any kind of a month, you got buyers taking profit in the stock market. And then obviously the next month you get that little recovery. So that's what you guys are seeing right now. So you got Dow up around 4% on the week, but today we're a bit down, right? But over the week, NASDAQ has been definitely recovering. We had like the worst week in NASDAQ, Sharma, I think, since 2008.
Yep.
Or worst month. You saw that as well?
Yep.
So looking at the S&P 500, we're up around 5% and down about 1% right now. And then you got the UK 100. They're kind of preparing for interest rate hikes right now, probably pricing that in. But they are up about 0.5% for the week. So let's take a look at the economic calendar. As you guys know, we got interest rates coming out this week or today. Here we go. We got where are we? There we go. We got asset purchase facility, Bank of England policy report, monetary policy statement number 1, official bank rate. We'll see if they actually increase rates. I'm sure they will. I think that's basically what's been pricing in. If any of you guys have been trading London, you guys got a beautiful move from 155, 400. We ended up holding that support over there. I'll break that down, but it was a beautiful move to catch some of that pricing in of the interest rate hike. So that's what we have right now going into it. We have monetary policy coming out of Europe as well, but we're going to be paying attention to these main things right here. And then later during New York, if we're still on, we got unemployment claims as well coming in. All right, so that's the main thing that you guys want to be paying attention today. Let's go back and back test our charts. Not back test, but break down the technical charts over here. There's a nice move on GJ right now. Sharma, did you jump in?
I haven't yet, and that's because we're just a couple of minutes away from interest rates.
Yeah.
But it seems like if we are able to see the interest rates coming out in favor, which is pretty much interest rate hike that we have been pricing in, then we have a pretty good range for about 30 pips or so for a continued push up, and that's the entry that I'm looking for.
Absolutely. So as you guys see, we had been bouncing off since the last time we, hopefully you guys have been able to watch that Monday breakdown we did. But as we came all the way back down, we retraced all the way back down and came back down to grab liquidity before increasing interest rates, right? We've broken down all these moves over here, the interest rate or the the presumed interest rate hike, bringing us up to 158. They didn't increase rates, bringing us back down to 49. Then they increased rates surprisingly in December, and now they've gotten that retracement. You know, buyers have come out, right? There's been a lot of turmoil in the equity market and the global markets. Got a lot of fear of inflation as well. So buyers came out. We never broke the all-time highs of the year over here. So we came down. This candle over here ended up closing a strong bearish candle, but with no bottom wick. So everything is 50-50 from that point. So you got this push that came all the way back down to candle body highs here to the left. Grab liquidity. The candle closed bullish with a wick to fill. This candle didn't even create a bottom wick and just started pushing up. That was that, you know, retracement, that correction from this move down, pricing in the presumed interest rate hike. Just like right over here, just like right over here. Actually, more so with this move over here, because this is the presumed, you know, interest rate hike. So is this. This is an actual interest rate hike. So this gives you an idea of what's going to happen once they increase rates. Can we break 158? I mean, maybe. Let's see. But I can definitely see it. But with what Sharma was just talking about, maybe not, right? Maybe they do, you know, we start pricing in where we end up retesting these highs. We get a triple top and price rejects that because they end up, you know, dropping rates next month. Looking at the daily over here, as you can see, price was in this downtrend. We hold support over here, grab liquidity, and we've just been printing higher highs, higher lows this whole time, right? Get our turn on that here. As you guys can see, just respecting the nice market structure, higher highs, higher lows, coming right back up into this level over here, right? We kind of stalled over here a little bit during London, but right now we created that bottom wick this morning, past the high over here, and then, you know, now we're definitely approaching like 156 over here. As you guys know, very significant level here in the higher time frames. 156 is a level that we spent all of 2020 trying to get back up to, right over here as well. And then you can see it to the left also.
So one thing just to note as you're breaking down that level is we're sitting at 155 around 700 area, right? So as price pushes up today, you know, with interest rate hikes and all that type of stuff, clearly we have been pricing that in ever since price tapped into that 153 level, right? And we're trying to push up with that optimism to the upside. Now that 156 level you saw from the monthly time frame, there's a very high chance if the interest rate hike happens that we may end up seeing a possible move like this, right? So price may break past that 156 level, but it's very, very important for a continued move that you wait for a pullback and then a continuation back up. So you could scalp this entire move up, but you should start taking partials as price comes back and starts tapping into these previous resistance areas, because last time when price failed to come back and actually create a proper support, we just came right back down to that 153 level. Right? So we could come back and do like some sort of a consolidation for the rest of the session, something like this, as there's the euro interest rates coming out. There's a press conference with Bank of England, with also ECB, you know, all that type of stuff. Plus, on top of that, we're getting ready for NFP for tomorrow, right? Which is also very important. So you could definitely take a scalp opportunity, you know, like this one, but be very sure to take some partials and not turn a winning trade into a losing trade just by hoping that's going to go in your direction. This is a monthly time frame. You need to wait for a break and retest on, you know, the daily, on the 4 hour, and then think about, well, if the daily needs to correct, if the 4 hour needs to correct, then what would that look like on lower time frames?
I'm actually surprised we're rallying this hard, like right before interest rates. You would think they'd want to get in at a better price, you know?
Mm-hmm. But it's also, the forecast is already, sitting at 0.5%. So that's what a lot of the market sentiment and fundamental traders trade. What's the forecast? What can we expect?
Absolutely. All right, looking at the 4 hour. All right, so now just as you can see, the price action is getting a little bit nicer, right? As we were coming up from 153, we've been like very choppy coming up, like, you know, chugging along. You have Nice. You have this bearish trend over here that we were creating these lower lows, lower highs, bringing us back down to 153. Now we're in this consecutive, bullish phase over here, pushing us out. We did break our level over here, the previous support. 153 or 155, 450, I would say. You'd see that previous support resistance over here, and now price broke it. So could we get like a pullback, a possible pullback, like a liquidity grab, and then price takes off once that those interest rates come out? I could definitely see it where big banks want to come back in, and then price just jumps. But right now, just nice price action. As you can see, this bullish candle just closed perfectly above resistance over here. We then got the wick rejection where we came down, retested with this wick, past the high over here, and then now we're continuing right back up. Wow. Yeah, see, it's 7 o'clock right now. Hold on. There you go. You got that liquidity grab. Price coming right back down. Damn, we should have.
Yep, they did the interest rate hike. So look at that. Dropped it. Yeah, there you go.
Yeah, I tried to drop it down in the lower time frames. Price is taking off right now.
So that's just the bottom wick and then push back up. I'm going to give this at least a 5-minute close here because that's a lot of volatility that just kicked in.
Oh, yeah.
There you go. Someone's TP has already been hit.
Beautiful, guys. Somebody have a buy stop set?
I believe so. Borga, did you have he took a buy at 155.631.
Do we have a chat?
Yeah.
Or was that in
No, it's a chat. Zoom chat.
Why can't
this is the type of stuff that I would drop down to the 5-minute for. Interest rate, CPI, and fees.
To be honest with you, I wish we hopped on earlier. I wish we next time we get some news coming out. I mean, you guys on the West Coast, I feel bad for you. It's a little bit tougher to wake up. But if you guys do want to trade this, we got to give it some time where we're breaking everything down and you guys are getting ready for something like this. But this is what I was talking about, where you get this liquidity grab, price comes down, you often see this, and then price just takes off, obviously with positive news. This is the number one fundamental for any kind of pair, right? Or for any kind of currency, more so. So it's something that you want to back test and you want to understand like the way price moves before getting in. Oh, Borges sent this. Awesome. Yeah, beautiful. Right above this resistance over here. And you place this, this came into drawdown and then that happened, I'm guessing.
Yeah, and then also look on the 1 hour time frame. So for those of you guys who haven't gone in, myself included, we haven't missed out on anything.
No.
And the reason why I say that is because all price really ended up doing, you had that break and retest, a quick bottom wick, that liquidity grab, and push back up. There's no way, you have to understand like what's happening in the markets right now. You're still rejecting buyers. The bullish momentum is there. We are going to end up breaking that high. Now, where is your better entry? Well, I don't think price is going to have enough momentum to continue pushing back down here, but you have to pay attention to what Governor Bailey will be saying. But I do think in that 30-minute time span that there are potential better opportunities as price is pulling back into these areas. And this is where you drop down to that 5-minute time frame. Can we see that 5-minute time frame real quick?
Absolutely.
So on that 5-minute time frame, you only have like about 2 minutes left here, right? So wait for this candle to close. And then you look for the same exact setup that you will look for on the 15-minute, 30-minute, 1 hour, whatever, the break and retest that we talk about. The reason why I'm not taking a trade on this candle here, and I don't, honestly, I'm not getting FOMO or not regret taking this trade is because we broke all the lows and the highs. That's a ton of volatility, right? Yeah, that's like volume kicking in, interest rate hike, this and that. But still, technically, the candle broke the bottoms and the lows and the highs. I need to wait for this candle to close. I need to see the next one make some sort of a bottom wick and then break this high. And that's my trade opportunity right there. Or the next 5-minute candle closes bearish, holds this area as support, and then continues pushing back up. I'm using the same strategy that I would use on a 15-minute or 30-minute time frame. The only reason why I'm dropping down to the 5-minute is because it's a high impact fundamental with the interest rate hike. Interest rates, CPI, and NFP are the only fundamentals I would drop down to the 5-minute for.
I'm trying to understand what Borg is saying over here. The risk that I took is to enter before the news. So you're saying Borg, you dropped your risk? Okay, cool. So it's significantly lower than your normal risk when you're trading the news, which is smart. If you're going to trade news, you got to drop your risk. That's it's more of a gamble. And like to Sharma's point, what she was saying, like just picture any kind of business. Like, do you want to get in as soon as like the business opens and they got the highest prices, or let's say like an IPO? Are you guys like buying into an IPO like right away? Or are you going to wait for some of those excited buyers to get in, them to be taken out? Price comes back to a discount and you get in at a better price, or would you rather just hop in like everyone else does? So just wait for that setup that you're normally looking for in the higher time frames, and we'll see if we get a little retest, get in at a better price. I'm sure 156 will get at least tapped into before continuing back up. But we'll see.
I'm just waiting for that wick high right there to be broken,
Right
and
here.
then I'll push back up. Yep. So whether you trade 1 minute, 5-minute, it doesn't really matter. All you're really looking for is a support to be made.
That one right here, guys.
Yep, and just wait for those candles high to be broken, because look at where the previous 1 minute candle highs. Even talking about it kind of makes me feel weird because I don't trade the 1 minute. Right, lowest is that I dropped down to is the 5-minute. But again, even if you're trading the 1 minute and that's what you use as a confirmation, you still have to wait for the highs to be broken.
Also, guys, if this is something that you're not used to, or you haven't traded yet, just stay out of this. Don't get, if you're not comfortable trading this volatility, you don't need to catch this move. Wait for the reaction today where we form like a clean support. You start to see like some of these supports formed on the 4 hour, where you get these supports formed. You get this pullback, price forms a solid bullish candle, and we continue right back up from there. There's many different examples of that. 1 hour right over here, a setup like this. I'm sure you guys have seen this before. Let's go back to the lower time frame so we don't miss anything.
Let me go ahead and move.
Just my David?
Sir.
Yes, sir. I love it. Great job, man. You took it as we passed the high over here.
Yep.
Beautiful. All right, so we'll see if we hold the support over here, or are we going to continue right back up, passing the highs. Now, we just ended up closing. I mean, this is only the 1 minute, but as you can see, we now just rejected that area once more. We have multiple rejections on the upside over here. So it's the same thing as any other time frame. Will we hold this support? All right, we're taking off over here.
Yep, I took an entry at 156.266.
Beautiful. Okay, as we pass the high up here, that's where I entered. My stop loss is right below this support, anticipating the continued volume push to continue right back up.
So right before the press conference comes out, I do anticipate to take some partials, wherever price may be sitting at that point, 10 pips, 15 pips, 20 pips. And then I do intend to move to break even. So even if there's volatility, as the press conference is coming out, I don't really want to be part of that volatility.
Absolutely. Just want to look at where we're headed right now. So also the beginning of the hour. So this is the 1 hour candle over here, and we're just chugging along.
Yep.
All right. So here's our next target on the 1 hour. Right up at 156, I would say 800 over here. Definitely a high rejection area to the left, but you got a clean move basically up to that. Right now, we are in like an interesting area over here We got that previous consolidation area, but we ended up pushing right through that right before, shortly after that. So, with interest rate hikes and the volume that we have right now, what are the chances we just mirror this move right back up to this area? Pretty high.
So that's why you haven't missed out on any trade opportunities. Exactly. You're just going to have more trade opportunities lining up for you. You just got to wait for it.
Absolutely. Got a strong close above that resistance over here. Created a high over here. We're coming down to retest. Let's see if we respect market structure. We respect this resistance over here. And if we close back into this range, you guys got to cut some off.
Mm-hmm.
Got to have that exit plan always.
Yeah. So this is exactly what I was talking to we were doing a simulation sessions yesterday to get ready for today and then also Friday. So this is exactly
what
was that?
Oh no, my.
No worries. So that's what I was talking to them about, where it's like whether you're in profits or whether price is coming back into your stop loss area in your drawdown, you should always be able to, once you take a trade, be always able to shift into this gear of, okay, what am I doing next? So if you're in profits right now, right, you took an entry and price is pushing up, then you need to be thinking about, well, am I going to take partials at 10 pips, 15 pips? What do I need to see candles closing above or, wick rejections? Like, what do I need to see technically on the charts for me to take partials and support that 10, 15 pip, wherever I'm going to be taking partials? Or if price pushes back down and it closes into a range, am I going to wait for it to come back and hit my stop loss? Or if I see candle lows being broken, then I know that, okay, it's headed for my stop loss and I can cut 50% or cut out the entire trade and then look for a potential re-entry, right? But your re-entry should only be your second trade. You should not be over trading any of this. So regardless of whether you're in profits or in your loss, you should always be thinking about what to do next. A lot of people, they know what to do when you're in profits, but a lot of people, or the same people, they just don't know what to do when you're in losses. You do the same thing that you would do in your profits, take partials, right? And taking partials in stop loss area just means closing 50%.
Não gostei, não.
Tu disseste assim, quero uma cena dessas. Assim. Vamos almoçar.
We gotta meet some people.
Tá bom.
E tu, mas não queres carne? Agora.
There we go.
All right, so Stephanos is going based off of the 1 minute. I'm going based off the 5 minute, same thing. But here, if you go into the 1 minute real quick, just in case someone out there is trading that 1 minute. So you had all this consolidation. Clearly, even on the 1 minute time frame, same exact thought process as any other time frame. Market collects orders in consolidations or retracement. So you had a consolidation, came back down, created a support. It's pushing back up. If you're in your 10, 15 pip range right now, and you usually take partials at 10, 15 pips, make sure to take partials right now, right? And then, you could either, there's a couple of different ways that you can manage your trade. The one that I personally do, you trail your stop loss, you could move to break even, or you decrease your stop loss. So in this case, if price has already created a support here, and I don't want to be part of any volatile move as price pushes back, after taking partial somewhere around, this up top area, I'm going to move my stop loss right underneath the zone. I'm still going to give it enough room if it does want to come back. It is the 1 minute, it is the 5 minute time frame. It's not going to follow perfect structure every single time because it does need to work together to create those higher highs, higher lows from the 15 minute, 30 minute time frame and higher, right? So I'm going to give it enough room to come back and possibly retest into this area, which might give us a pullback on that 15 minute, 30 minute time frame and then continue back up. But once price comes back and taps into this area, I'm no longer comfortable being in this trade. So after taking partials and decreasing my stop loss, I'm still going to end out the session profitable.
Mm-hmm. Yeah, before you were saying that, I actually secured up here at 14 pips. After this candle over here, and this is the same exact thing as the 30-minute, and again, same thing with fundamentals. You got a speech coming out soon. So what I did was I saw this candle close with barely a top wick over here, and this candle passed the high right away. Again, factoring in that Bailey's going to be speaking, I just took partials, but right before I took partials, I actually moved my stop loss up to this support over here. So I had about a 4-pip stop loss right around here. And then I just took some off, right? Took 80 off, and now we're just, running.
Yep. So I just took mine at 156.421, my partials. So that was around 16 pips or so.
Beautiful. Great job, guys. Especially you guys that had those buy stops. David, beautiful trade, man. I think we did break the weekly. Yo, boy, guy, do you mean to be sending a direct message because everyone could see it? Or are you trying to send it to the whole group? So I expect a huge push up, specifically with the good news for GBP. Yeah, no, I fully agree. This is the number one fundamental. This is what strengthens the pound, right? And also you're going against a weak Japanese yen right now. So this is going to skyrocket. I think this is going to skyrocket a lot more than a pair like GU will, right? GU's going to correct a little bit, and, we're going to see a nice push up, and then GU is going to continue right back down.
Yep.
Because you get U.S. increasing rates in about a month and a half, 2 months. So that's all being priced in right now.
Yep. And then just real quick, the next partial area that I'm targeting is 156.632.
Okay.
And that is coming from the hourly resistance, 4-hour resistance areas. So I closed 50%. At that point, I'm going to be closing another 25. That means I'm only going to have 25% of my trade running.
Okay. I just want to look at the dollar over here. Yeah, so this is exactly the price action that you guys look for in the 30-minute as scalpers. You get that clean close above, get the retest right over here, and prices continuing up. You grab your 10, 15 pips, secure, stop loss at break even, and then that's it. You got your trade for the day. So this is very simple. Obviously, it's on the 1 minute. It's not, ideally what you guys are looking for, but especially with a pair like GJ, gold, US 30, sometimes you got to drop down at these time frames. All right, 5-minute close with barely a top wick. This candle passed the high right away. So could we be getting some kind of a pullback, especially before that tweet, or not tweet, the speech? Grab a liquidity and continue right back up. 156.800. Everyone having a good week so far? You got Reese, Raphael, Kat, John, the devil.
Right, I'm going to go ahead and take a look at the monetary policy report and what can we expect Governor Bailey to talk about.
Awesome. I'm going to grab my my iPad real quick. Give me 1 second.
Yeah, for sure. If you guys are looking to read the monetary policy summary, which you should be, so then you kind of understand what Governor Bailey is going to be talking about in his press conference, what kind of questions can he be asked about, go on to Forex Factory and click on the folder right next to BOE monetary policy report. It'll take you directly to their Bank of England site, and then click on, I think it's just the first link, since this is the most recent fundamentals that came out. And then as you continue down into that little monetary policy summary part, I don't know if people, or actually let me try to share this here on Zoom. as well. Yep. All right, everyone here can see this, right?
Yep.
All right, perfect. So just to break it down real quick, I'll go through that entire process here. So go into Forex Factory, click on this little folder right next to the Bank of England Monetary Policy Report. Latest release.
DJ, we're seeing Stefanos' screen, not yours.
Oh,
Yeah, we can see it now.
There we go.
okay, perfect. You guys see it now?
Yes.
Yeah.
Okay. All right. So then go on to the Monetary Policy Report right there, February. Oh, sorry, hold on. I'll go back. The news and publication right there. And then February 3rd, Monetary Policy Report. Or you just click on the summary as well, right? So you could click on the Monetary Policy Summary as well. It'll take you to the same exact place pretty much. And you can just click on that. I'm going to go ahead and click on the bank rate increase to 0.5%. And then it gives you that entire summary. So here, they're increasing the interest rates, obviously, and then the committee voted as well to reduce the stock of UK government bond purchases financed by the issuance of central bank reserves by ceasing to reinvest maturing assets. So they're going to continue tapering. That's what the next couple of sentences mean, right? Which is a good thing, because when you're tapering, you're pretty much testing the waters with the economy, whether or not your economy can handle the money supply decreasing. Clearly, we have fundamentals that are coming out that are showing evidence in the opposite direction, that the economy is not just yet ready. And this is what they're kind of addressing in this next part here, where the wholesale energy prices are assumed to follow their respective future curves for the first 6 months of the projections and remain constant beyond that, right? Which are downward sloping over coming years. So at the moment, they are still identifying, they're still acknowledging the fact that wholesale prices, they're going to continue in whatever curves that they have right now, which is obviously an upward curve as prices are increasing. We've already seen the news about that. So these are some of the things that we can expect Governor Bailey to talk about in his press conference. And what would that necessarily mean? Obviously, think about market sentiment. As an investor, if the head of the central bank comes out and tells you like, hey, yes, our energy prices are increasing. Yes, that is going to price into the inflation and all that type of stuff. But in order to combat that, we're going to be raising interest rates. As an investor, what does that necessarily mean, right? And then also think about, as a consumer, what does that necessarily mean? And then as you continue down, you're going to continue to see some details here. But pretty much what I'm paying attention to is anything that they're anything that they mention about the supply, the global supply, and how they're being affected, inflation, and all that type of stuff. So they talk about inflation right here. The projected overshoot of inflation relative to the 2% target mainly reflects global energy and tradable goods prices. The future rise in energy futures prices meant that the utility price caps were expected to be substantially higher. The core goods CPI inflation is also expected to rise further due to the impact of global bottlenecks on tradable goods prices. So obviously they're still identifying and acknowledging inflation and global bottlenecks that's happening in the supply chain. Right, so these are some of the things that you guys want to be watching out for in the press conference, and think about, well, what kind of market sentiment does that set out for the consumer and also for the investors?
Absolutely. That's so valuable, that, fundamental knowledge. You want me to share?
Yeah, go for it.
That's why we preach how important fundamentals are. Just it gives you so much more confidence, at least having somewhat of an idea of like what's going to happen and why price is moving the way it is. The one thing I did, I was explaining to my group the other day, like if you guys are just starting out as traders and your main focus like is just trying to read a chart and trying to understand like the way price moves and stuff like that, don't spend as much time on fundamentals yet, right? Just make sure that you can master price action, or it could be the other way around, right? You're mastering fundamentals, you understand like economics and stuff like that, and you're coming into the game with a background somehow in that field, and now you're trying to understand technicals and understand how to read a chart. Focus on one of them mainly right now. Just like you're focusing on one pair mainly right now with that secondary pair that you don't backtest as much, but you're still live backtesting and focusing and journaling it. But it's the same exact thing with technical and fundamental analysis. Then you got sentiment too. But if you guys are still trying to understand how to read a chart and how, not understanding the anatomy of candles or levels or how important certain levels are, stuff like that, just focus on that mainly. And then give yourself like 20 minutes at night. When you get into bed, you got an iPad, you got a phone, just read fundamentals, read up on fundamentals, read the articles for the day, stuff like that, and try to interpret it that way. And if you guys are in our group, right, you can always ask us questions about like what something means. If, send me an article, let me know what you're talking about or, what your question is, and I'll be able to clarify it as much as I can. And I'm sure Sharma will do the same thing. But
100%.
But yeah, that's you're gonna spread yourself a little too thin, and you're gonna be a little confused, right? You're gonna be looking at something technically, and then like fundamentally, it tells you something differently, but it's kind of confusing you, and you're all over the place. I just don't want you guys to be like that in the beginning.
Yeah, so if you're starting off into trading, right, it's always easier for a lot of people to start off with the technical side because you clearly see candles, you see levels being formed and all that type of stuff, right? So then start off with the technical side. A lot of people who start off with the fundamentals and all that first, they tend to get confused because you see fundamentally where we headed, right? You see where we headed in the next couple of months or so. And then the hard part becomes translating that into, well, how is the market going to react right now? And that's the most important question, especially when you're scalping, right? On the daily time frame, on the weekly time frame, on the monthly time frame, yeah, mark off those levels, but think about, well, is price going to go up there in the current session, right? Or today? The chances are no. That's why you need to mark off, well, what's happening with the current weekly top wick or the current weekly bottom wick, and then how is the daily time frame playing into that, and then how is the 4-hour playing into that. Take it by level, right? Small levels where price keeps tapping into multiple times. So that's what you want to be. That's how you should start off if you're very new into Forex. Think about what's happening right now. It's a lot easier for people to start off with technical analysis first. And that is one of the important aspects of trading as well, technical analysis.
Absolutely. Just going to mark this up for you guys real quick. And then also we have unemployment claims coming out. So I will we'll break down gold in a second as well.
Does anyone have any questions so far? On Zoom or even on YouTube? We're going to have the press conference in about 3 minutes, so we'll wait for that. And then we can talk about the euro interest rates and the services PMI that's going to be coming out. But I have to head out at 5 a.m. PST, so like in 30 minutes or so.
Okay.
I just have a quick meeting.
You're good.
If you guys are struggling with journaling, this is pretty much how to do it. Stefan's showing you guys how to mark up the charts and how to journal.
Absolutely. You guys just want to like put as much detail as possible into it. Not as much into the description. Like it doesn't have to be like a crazy amount of paragraphs, stuff like that. But just make sure like in the title, you have all the details, the day, session, time, but the exact time you get that volume push, right? Not 8 o'clock. It's 8:04, 8:05. Like that's what you're also writing down in a visual written down journal that you have as well, like on the side, not just Trello, but something that you're writing down almost like a diary saying like, okay, We got the volume push at this time. Interest rates came out. We got that deep liquidity grab on the 1 minute. Price flip bullish, and we just took off from there. So how can I capitalize on that? What time did that actually happen at? Right? All these different things. When did we get the reaction to the move, which is basically what we got right over here, right? So all these things that you're writing down, some things can be on that Trello, some things can be written down there, and that's something that you're going to have to figure out, whatever you're comfortable with. Re-entry in the 5 minute when the candle closes. Do we see a retest? Yeah, let me just finish this. Up. Sorry, Kat.
No.
Let's
Break even. All right. Yeah, we got that deep
in this case, wait for if you hop up to the 15-minute time frame, you only have like 1 second left for this 15-minute candle close. So wait for the next candle to break the high, and then that's your entry. Because right now is when the press conference is supposed to start.
Look at like the 1 hour right over here. Could you possibly get something like this on the 15 minute right here? Only thing is this candle doesn't have a top wick. So let's see what ends up happening over here. This is a wick that we could potentially fill during the press conference, and then we could continue right back up, or we just create like a small bottom wick and we start to pass the high up there.
Yep. And also, if this is your first time trading a press conference, I would say paper trade this. The market will react to pretty much every time the central bank head will open his mouth. He will be asked questions about the economy, his outlook, how are the central bank going to handle certain situations, things like that. And all of that creates a market sentiment, right? All of that creates some sort of an outlook, some sort of like an investor sentiment, all that type of stuff. So the market will react to it.
Where's Cat? Oh, we got people talking about the results. Mike's still out of commission. So far, so good. Good. KB, good week so far. 1 trade, 1 win. And in this trade with you guys. Awesome. Yo, guys, if you guys could just share the YouTube stream or just share like what we're doing over here, would mean a lot. 30 minute, looks like maybe we created a bottom wick.
Yep, you got that support form right there on the 5 minute. I would say still wait for that high there to be broken.
Yeah, like if there was a big wick right here, I would love this if we just passed the high over here.
All right, we're still pushing strong here.
So I was trying to pull up Bloomberg over here.
No worries, no worries. All right, about 16 minutes ago, we just got another news. UK's Chancellor announced a raft of measures as the UK government sought to get a grip on the cost of living crisis. I'll go ahead and drop this link here as well.
Yeah.
Right there.
Oh, here. Stop the share for you.
Perfect. Give me 1 second. You guys can see this?
Yes, we can.
All right, perfect. So a £9 billion package to offset energy crunch.
Wow.
Yep, the government is going to step in to directly help people manage those extra costs. So what is this essentially? Are we increasing money supply? Are we decreasing money supply? What are we doing? If you guys were to just guess.
You guys can write in the chat.
Increasing money supply. You're putting more money into the economy. So see how in the speech, they were talking, not even in the speech, but the monetary policy summary, they were talking about how, well, we're going to continue tapering and all this type of stuff. Right before interest rates came out, we had fundamentals talking about the energy crunch, right? And the cost of living crisis and 54% jump and all that type of stuff. So see how we're pretty much headed into this direction of, yeah, we just increased the interest rates, but there's a very high possibility that we may not be able to hike it in the next meeting because you don't have the fundamentals to support it. You don't have the data to support it. Now think about, well, you just had this news that just came out. You have a press conference going on. Interest rate monetary policies just came out, policy summaries and all that came out. And you just broke above some key levels, 156 from higher timeframes. What are potential moves that you could see? Clearly, this is not painting a very positive picture. So we could see some sort of retracement happening on, the 15-minute, 30-minute, 1 hour, 4 hour, even the daily level and all of that as we're breaking above key levels and we're getting these fundamentals coming out. So that's how you use fundamentals, understand what the market sentiment is, what kind of picture does it paint, and then use technical analysis to find those entries or even exits. If you're in a trade right now, you should probably exit at this point if you're still profitable, or at least move to break even or manage your trade somehow so then you're still profitable if and when you get out.
The reason you were saying wait for the high to be broken.
Yep. You can go ahead and share your screen.
Yeah, we just got that rejection right over here, this high, and it was mainly, I'm looking at this 15-minute with this candle. It's like that candle wanted to create its top wick and maybe fill this candle. Now we get in at a better price. Don't think like we missed this whole move, all that stuff. You have, a whole reaction to this, monetary policy statement and also like the press conference where price could come right back down to 156 or anywhere in this area, hold support, and then we just continue right back up.
Yep.
Because look how overextended we are of this bullish trend that we've just been in. Right? So what are the chances price comes back and retests itself? We're breaking out of this area. What are the chances we come right back into this area, hold support, and then continue right back up, or come back down to this, we reject this this channel, come right back down to this area over here, and then continue back up. I don't know if that's going to happen, but it could. You're just looking at all different possibilities. I think we could at least come back down to 156 right here. You get
that level definitely has to be respected as support if price is to continue bullish.
Exactly.
There's no doubt about that. It's just when is it going to happen and how we're going to catch the moves back up. Or is this going to be a fake out where you push up right into, if you go into the 4 hour time frame real quick. Yep, and then zoom out just a little bit. There you go. So where do we just come up and make a top wick right into, right into that consolidation area. Now extend that area over to the left. We see how this is a key level. Everyone kind of sees that?
Sorry, I had to sneeze.
No worries.
What was that?
So everyone sees how this is kind of a key level right here, and look at what price has been doing every time it kind of taps into it. Right? So we just tapped right into that area. Clearly we rejected buyers. That's what top wick means, right? Rejection of buyers. And then what are some potential moves that we can end up seeing? 156 level is definitely a very key level coming from the monthly time frame. So we definitely need to wait for some sort of a pullback and then a continuation back up.
Yeah.
A pullback is going to happen. There's no way that price is just going to shoot all the way up to 158, 157.
Yep. Even like the previous move when we actually increased rates in December, we see these pullbacks, right? You get these highs, these top wicks, right? Price comes right back down to these key levels and then just continues right back up. The market just doesn't continue bullish always. You're gonna get that correction, which is what you want. You want a discount. You don't want to be buying that at the highest possible price that they could get you at.
Yep.
All right. So we're rejecting this 156,500 level. We'll just keep it on the 15-minute for now. 5-minute. But right now we're sitting in this range. So are we going to stay in it and continue up or get that pullback? I'd rather get the pullback.
100%. It's a much better entry.
Yeah.
All right. So just to quickly discuss, you're coming up close to a 15-minute close here in just a couple of minutes, in about 5 minutes, just over 5 minutes. After this, you have Euro interest rates coming out, right, in just a few minutes. And then the monetary policy statement, 30 minutes after that, or about 45 minutes after that, you have the press conference coming out and the U.S. unemployment claims. About an hour or so after that, you have an hour and a half. After about an hour and a half, you have services PMI coming out. So you have good fundamentals coming out for the rest of the session. You have a ton of different pockets of time where you can trade these fundamentals. Use that with your technical analysis. Wait for price to pull back in that time frame from right now to all the way to ISM services PMI coming out. Wait for price to create support, resistance areas, and then look for your trade opportunities. And also understand, are you looking for a retracement trade or are you looking for an impulsive move? What I mean by that, I'm going to annotate here real quick, Stefanos.
Yeah, I'm going
is
yeah.
Right here, real quick. So what I mean by that is, are you looking for a continued move that moves with the trend, right? So these are impulse moves right here. So are you looking for a trade like that? And every time price with that, let's say you did end up taking an impulse move, right? So let's say with that, if price retraces back down, you should be able to identify, well, if price breaks lows on the 30-minute or 15-minute, I'm going to take partials or I'm going to close out my trade, right? I'm going to make sure that I'm not catching a trade when price is already sitting at a high. What I mean by that is price has already created, some sort of a support right into these areas and then pushed up bullish. After that, we definitely needed to wait for some sort of retracement. So make sure you're not catching a trade somewhere up top here. That is instead where you should be taking partials, right? And then after this case, let's say you've entered somewhere over here or whatever it is, then you start thinking about, okay, well, once price has tapped into this area and I take partials, I'm going to move to break even, which is what Stefanos did, right? Or if price comes back and, closes below this area, then I'm just going to close out my entire trade.
Here we go.
As price is pushing right now. So that's one thing. That's your impulsive move. Or is this a retracement trade that I'm going to end up taking on the 15-minute or the 30-minute time frame? That means, am I going to end up taking a retracement trade here? If that happens, then clearly don't look for a sell opportunity. If this is like my entire move right here, then don't look for a sell opportunity that's going to come all the way down here. That's not going to happen, right? Look at your trend. What's your trend from the 15-minute? What's your trend from the 30-minute? What's your trend from the hourly, 4-hour, daily, and all of that? Whichever time frame that you're trading, make sure you're looking at the trend for that. And then make sure you're taking trades that would respect the trend. If there's nothing technically telling you, if you're in a bullish trend, that price is, going to just melt down, then don't look for a meltdown trade. Look for a trade opportunity that you're able to catch somewhere up top here that will run until it tests the structure and then continues back up.
Yeah.
And at that point, again, this should be your TP area. Or if you want to test the waters and see, is it going to break the structure here? Are we going to get that volume kicking in? Then close out, let's say 80%, 70, 80, 90% of your trade and let a very small runner run while you're at break even or you have trailed your stop loss, so you're completely risk-free. So keep those in mind as you're trading the rest of the fundamentals for this New York session.
Yeah. And there's times to be taking that pullback trade too, where like if you get like, let's see, we've been in this bearish trend, right? Just going to correct that a little bit. But since tapping into this level up here, yeah, let me just erase that and draw a new one. We've been making lower lows and lower highs, and there's times where price will come back down to a serious support like 155, 400 over here, where you could get these pullback buys coming back up to this area to then continue right back down, and then you grab the scalp of the swing right back down to retest that low, right? That's happens pretty often. Right now, with the increase in interest rates, these aren't the pullbacks that you want to be taking. You just want to wait for the setup to form, or for the support to form on some of these higher time frames, like the 15-minute. Don't worry about the 5-minute anymore. Wait for that 15-minute to create that support, and then you can take that up to retest the high and then continue bullish from there.
All right, we got euro interest rates in about a minute, or just a couple of seconds, actually.
Refinancing rate.
Let's see if they maintain it.
See, this is why, we've kind of been taking it easy all week, because this is where the volume's coming in now, today and tomorrow with NFP.
Mm-hmm.
All the previous days, it's like, all right, stayed at zero. All the previous days, it's like, you got to lower your risk. You got to know exactly what you're looking for. See how like all the time frames are really just like the same. They all move the same way.
So now you're pretty much done trading, unless you're trading a euro pair right now, as the euro data is coming out. You're with GJ or like any GBP pair or whatever, you're pretty much done trading the 5-minute time frame. That happened when the interest rates came out, when the monetary policy summary came out. Now it's the press conference. There's going to be volatility. Don't trade the 5-minute. Don't trade that 1 minute. Now this is the time when you go back up to the 15-minute, 30-minute time frames and start looking for your trade opportunities there.
And these candles are getting clearer for you too, right?
Mm-hmm.
It's not just like one big rocket. It's now you got that rejection with a nice wick to fill. Top wick forms. Price fills that wick. This candle, it actually closes below the 5-minute support. This candle retests it on the 5-minute as well, but the 15-minute just opened up, so that's why you see that. And now we could possibly fill this wick and come right back down. We don't know where we're coming back down to, but we're just looking for some kind of a support. Again, it could be coming back down to 156 and we continue up from there. Could be coming down to 155, 700 or 600 down here. Then we continue up from there.
Yep. Can you hop up to the 4-hour real quick?
Absolutely not.
Just to show people visually.
There you go. And you get the 4-hour closing in about, what is it, hour and 13 minutes?
Yeah. Can you zoom out a little bit more so I can see yeah, there you go. Perfect. All right. So here you still have that bullish momentum to the upside, right? So this is a trend line that Stefano's, drew over here. So now if you're just looking at this, well, where has price moved? If I'm simply just looking at this is your basic bullish structure, correct? We've tapped into that area, created support, and pushed back up. Is this an impulsive move that you want to be taking at this point as you're sitting at some of the closer highs? Not really. What do you need to see happening here? I think even a potential better opportunity could be if price pulls back a little bit deeper, right into these areas, rejects right into this one more time. And the reason why I say that is because when price has rejected this and we are in some sort of a bullish move, short-term bullish move, we do see volume kicking in, right? We do see volume kicking in into these areas. So even better is if you get a pullback right into this 155, 500 area, and then you can look for a continued buy opportunity, right? And then if you drop down to the 1-hour time frame, this is the candle that we were looking at right when the interest rates came out, where price made that little bit of a bottom wick after creating this support of breaking retest right above this 155, 400 area right here. made that bottom wick, and then continued pushing back up bullish. We came back up, rejected 156,500, and now you're leaving this top wick, right? So that's why you haven't really missed out on a trade opportunity. If this was your first time trading interest rates, then you guys got to see how to take trade opportunities to the upside as soon as interest rates come out, right? We took those a quick scalp opportunity. We're pretty much in and out. We're done, right? So in this case, if you're waiting now for the rest of the session to take a trade, now wait for this candle to close. It's going to close in about 10 minutes. So just wait for 10 minutes. Are we going to close above this area? If we close above this area, all you need to see happening here is a bottom wick, which would be hopefully best case scenario is a 30-minute candle close bearish right above this, and the next 30-minute candle continues right back up. On the 1 hour time frame, that translates as price making a bottom wick right into this area and then a continued push back up. As that happens and you get that break and retest on the 30-minute time frame, that's your entry right there. Keep your stop loss right below this area, and you could come back and target this entire wick fill. If this candle closes bullish right here and the next candle continues and breaks below 156 and closes below that, then you don't have a buy opportunity just yet. You need to wait until that retracement is done, whether it taps into this area or somewhere here or whatever it taps into. Wait for that support to be formed and then a continuation back up. Don't look for a buy opportunity in a pullback like this. Wait for the pullback to be done. Wait for one bullish candle at least in your direction where price has created a support, and then a continued push up from there.
And even if it closes below 156, I don't think that's a bad thing. Now you're going to be able to get in at a better price. Also, if you go back to the 4 hour and you take a look at some of this price action from 153, take a look at, this London and New York session where we pushed up from this resistance over here, pushed all the way up, 9 o'clock candle. Guess what happened with the next 4 hour candle? We got that pullback, right? And then price continued in our direction. Over here, London, right, pushing up, Asian, London, pushing all the way up here. Around that same time, 9 o'clock, 10 o'clock, we get that pullback, and then price continues in our direction, right? This happened during pre-New York, and then later during, the afternoon, then we continued to chug along up to 155, 200, finally broke it, retested it, and then continued through 400, that previous support. So now what are the chances we get this high now around like 9 o'clock, 10 o'clock, you get that pullback, and then we continue back up around like 12, 1 o'clock.
Does anyone have any questions about anything so far that we've discussed? Everyone pretty much understands what they're looking for the rest of the session?
Clean candles on the 15 too. You're just looking for these to get weaker, right? You get that bullish close, whether you want to wait for the 15 or the 30. Take that out. So is he speaking right now?
Yeah.
No way we could watch this? I don't see anything on YouTube, but we got Bloomberg.
Hike this year, even though the market prices one, but it means probably 2 or more next year.
Alberto, how do you position for this? How do you take advantage of the necessary ensuing volatility that we have seen?
So first of all, unfortunately, in this environment, we're in a hawkish cycle, we're in a bear market for risk assets. So if you're holding a long-only portfolio, which we're not, fortunately, especially if you're in bonds on a long-only basis, you have two outcomes. Either you lose money quickly because yields rise, or you lose money slowly because you get your gains from coupons get eroded by inflation. So it's a very challenging market for being long bonds. So what we do is we play defense in bonds. We hide into credits that have high coupons, low duration, particularly the reopening sectors in the economy. And then we have a number of shorts, because when the Fed hikes, there's going to be accidents. Where are the accidents? Probably in some emerging market countries that have unsustainable debt. Think about Turkey, for example. They've been defending their currency by increasing their balance sheets. Countries with weaker fundamentals, structurally, South Africa, very low spreads. So, we have a lot of protection for a hawkish cycle and accidents along the way. And we think that, as the dollar strengthens, these countries will have issues. And also weak credits across the high yield space. So it's a lot more nimble, lower gross, and lower beta portfolios for the coming quarters with a lot more liquidity.
Alberto, thank you, sir. Alberto Gallagher of Algebris on central banking and on the market, with a pretty dire call on risk assets there. Two pieces of controversy in the last 30 minutes for central banks. Governor Bailey saying this: the living cost crisis would be worse without the rate hike. That coming from Governor Bailey. Tom, the living cost crisis would be worse without the rate hike. That's his argument. The other piece of controversy for me as well this morning, Tom, is that the Bank of England clearly does not think this is transitory. The Federal Reserve is not using the T word anymore. The ECB is. They're sticking with it. And that's going to be at the epicenter of the conversation with President Lagarde at 8:30 Eastern in 36 minutes.
John, this is original economics. Everybody's thinking as hard as they can.
Yo, Stefanos.
Yo. Data.
I gotta head out for my meeting, but I will talk to you right after that.
Okay.
All right, awesome. And then everybody else here on Zoom or even on YouTube. So I hope you guys were able to catch some of those quick scalps with us. And if not, then at least, see how the market kind of translated all those fundamentals and how to manage the trade and all that type of stuff. If you guys have any questions at all, feel free to message either of us on Instagram, or, even if you want to drop a comment here. But Instagram for me would be the fastest way if you want to get a fast response. It's the same thing at Sharma FX, and then Stefanos, yours is Stefanos FX 28.
Yes,
right?
Correct.
Perfect. So if you guys have any questions, just feel free to reach out. I hope the session today was helpful. Even if you weren't able to catch trades, hopefully we helped answer some of the questions or something like that for you guys.
100%. And next time, we'll try to come back a little bit earlier. I mean, this normally we don't get news till like 8:30, with some of our stuff. But today, obviously, Bank of England, they were doing it a little bit earlier. So normally we'll be a little bit more prepared for that. But guys, have a great day. Get the most out of yourselves today. Push yourselves today. Back test, journal some of these trades that you guys have taken. Journal the trade you could have taken with this. And we'll see you guys next time.
All right. See you guys.
Bye, guys.
All right, we are offline. All right, Stefanos, I'll catch you soon.
You too. I'll see you.
All right. Have a good one, everyone.
All right, guys. Have a good day, all right?
See you later, guys.
I guess.
Thank you. Bye.